Okay guys, in this trading example, we're going to be covering an ES short setup. It was a short at around 2800. The markets and price tend to move around these big round numbers. There's a psychological factor in this, and so we pay attention to these big round numbers like 2800, and we basically add that into consideration for our trade opportunity if we have an opportunity around one of these numbers, and in this case we did, and it was a short. A couple things to pay attention to in this example. The daily chart takes out a previous high, meaning price on the daily took out a previous high. And when that happens, the market has a tendency, in some cases, the environment has to be right and there's got to be room to the downside, but in some cases it likes to reverse, and so it's basically like a false breakout. And so we use that again in consideration for our trading opportunity. From that area of interest, there was a big drop. So price took out that high, and then on a smaller time frame, we can see that it reversed, and there was a big drop from that area. And so we were waiting for a retest back up to that spot to hop on board. And it's basically a reversal in progress. There's plenty of room to the downside. We take out a previous high, and the market shows us that there's sellers present by pushing prices down from that level. We simply wait for a retest back up into that area, and that's our trade opportunity. So let's get right into it and take a look at the chart. And if you guys need to review anything for this section, in this example, go back to parts 2 and 3 of the Derivatives Day Trader course. Okay. So a couple things to start off. Again, the daily chart, we took out a previous high. There's lots of room to the downside, and we had a big drop from our area of interest that we were paying attention to. So we were looking for prices to rally back up to the origin of the big move down after reversing higher. Prices went up, took out the high, started to come down, had a nice drop from that price level or around that price level, and we simply were waiting for an opportunity on a retest for prices to pop back up to take this short, because there, as you can see in this on the charts, there's plenty of room in here to the downside in this green box. That's basically what this is showing. You can look at the daily as well and see that we have at least 50 points between this high that was taken out, where prices started to reverse, and where they could potentially go. So if we were able to find an area and define our risk, the risk to reward ratio is going to be pretty big. And that's the type of opportunities we're looking for, right? At the regular trading hours open, price rallied a bit, but then got rejected for a nice strong move lower. The size of that drop from that price level showed that sellers were definitely there in that zone, and price had been basing out up in that area prior to spiking up on an impulse move, right? So prices dropped up out of here. You have the nice big drop. Prices basically traded sideways in a little bit of a range. We got an opportunity once these highs were taken out to get back up into this formation, this pattern right in here, where you have a nice rally and then a reversal. This is on a 30-minute. We can see it on the 240-minute, right up around that big round number of 2,800. Prices took out this high. Here's the high right in here, previous high. Big round number. Nice strong move away. Risk to reward ratios definitely appropriate for what we're looking for. We have multiple time frames, right? So everything is adding up. We're looking for the confluence of all of these factors to create the opportunity for us. These are things that we take into consideration when deciding if, the market is presenting us with an opportunity. And in this case, it's checking off all the boxes. Then we go down to the 15-minute chart. You can see in this pink box basically is the first 15 minutes of the regular trading hours for the US stock market open. And that's something else we pay attention to. Price likes to revolve around these areas, the opening ranges as they're known, and you can see price swings. And so if we add that into consideration with everything else, we find our opportunities around these price levels as well. But you can see that right on the open, we rallied up, went a little bit higher, and reversed and dropped lower. Prices held lows and attempted to climb back up and get back at the highs, right? So this was the open right in here, right in here. The circle is not the greatest, but that's fine. This was the open. This was the open. Prices based out after dropping nicely, big nice drop out of this 2800 area. The low held, giving us a chance for prices to move back towards the high. And in this case, there was a nice base before it really dropped out right around this 27.96 to 27.98. Prices rallied up, reversed, closed lower, and then broke down and had a nice extended move away from that area. We had some trouble getting over this area before going down and testing the lows. Once the lows held, prices rallied back up into our area, and this was the shorting opportunity that we were waiting for. Again, let's go over this so you guys have a thorough understanding of what we're looking for. On the daily chart, number one, we took out a high right in here. Prices overnight took out that high. This is on the daily chart. So big time frame, there was potential for us to move lower. Prices had rallied strong through this area, took out this high, and basically gave us room to the downside for a pullback. That's number one. Number two, there's a big drop off this 2800 area. And a big drop, I mean, it's you have to take these things in context, but a 15, 20 point move away from a level is a nice sized drop in price in this case, is what I'm trying to say. So we had a price get rejected above 2800. Sellers came in, lack of buyers, pushed it down. We have plenty of profit potential down below for us to go lower. The market opened up at the US stock market open, rallied up, prices got rejected, dropped lower below the first 15 minutes, dropped below the overnight lows, and then rallied back up into that area where we have it on multiple time frames. Prices rallied up, got rejected, moved lower, extended move lower, based out right in here, held the lows, impulse move or pop back up into this area where prices dropped out of. That was our short signal. Again, if you guys need help with any of the stuff that we're talking about in this, review sections 2 and 3 for the derivatives day trader course. And hopefully this example was helpful. Just like all the other ones we've gone through and recorded and published, there's criteria that needs to be met in order for us to consider it a valid setup. And these are some of the factors that we take into account. So hopefully this was helpful if you guys are having trouble with trading or need some insight on how to read charts. This is a great way to understand what the market is doing and what it may do next. And that's definitely what we do and how we profit from the markets each and every day. So hopefully this video was helpful, and we'll see you on the next example.